A weak session sees the sensex and the nifty end near the day's low. Most sector indices end lower, with the Nifty Bank making fresh lows. Broader markets underperform in trade.
Specialty chemical stocks like SRF, Navin Fluorine and alkyl amines rally following a sharp rise in global refrigerant gas prices, which brokerages expect will help lift earnings of these companies that have remained under pressure.
Manappuram Finance surges in trade as RBI lifts restrictions on its subsidiary, but the stock comes off the high point of the day. Religare stocks as well trade high as the court order paves the way for the AGM and in fact the open offer as well. The other stocks in focus include Bajaj Auto, which surged post the brokerage update. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and set you up for tomorrow's session as well. I'm Nigel, with me as always, Surbhi. Hey Surbhi.
Well, Nigel, another tough day for the market. It's not been easy. It's not been an easy week, and Thursday didn't show up any different.
Well, that's right. Weekly expiry as well played out, so that could be another factor at play. But towards the end of trade, you saw a bit of a fight back, and that's why, at least on a closing basis, you'll have to say, thank God, at least we protected that 23,500 odd mark. However, as Surbhi mentioned, the broader markets, that was a painful space to be in there. You had only around 500 stocks that were advancing and 1,500 stocks that were declining. So the mid-cap and the small-cap index got pummeled. The sense you get is that maybe there's a part of domestic money that's getting a little bit sketchy. And because of that, we are seeing a bit of an underperformance out there. So that was the problem pocket, Surbhi.
Absolutely. But you know what? I want to talk about the silver lining today before we move on with the market action. And that is just the faith that retail investors are still keeping in the equity market, at least through their mutual funds, because the numbers came in for December. And in a month where the market has been so sluggish, range bound, also, even falling, guess what? In the equity mutual fund side, investors have pumped in over 41,000 crores. I mean, and it's about a 15% improvement over November. Not just that. The SIP numbers are at an all-time high. SIPs have pulled in over 26,400 crores. It's an all-time high number, and the money is really pouring in. While a large part of the market and experts talk about how large caps could be doing well, at least in December, it was still mid-caps and small-cap funds, which is where the money was going in. Mid-cap funds actually pulled in about 5,000 crores. Small-cap funds pulled in about 4,700 crores. So the going's been pretty good. But yes, the market has been testing investors' patience and faith. As of now, I think domestic investors are using the dip as a buying opportunity. So I thought I'll put that piece of positive news on the table, even as FPIs have been really challenging this market with their daily sales. But anyway, let's tell you about what the lineup on the show is looking like. We will start off with the key movers and shakers of the day. Vivek will give us a blow-by-blow account of what happened on the street. And then we put the spotlight on specialty chemical stocks like SRF, Navin Fluorine, and they were all up and about in today's trading action. We'll tell you why in just a bit. Manappuram Finance was in focus. The RBI reprieve came in on their MFI business, but didn't really help the stock. So more on this in a while. And then, of course, finally, it is earnings season. Lots to watch tomorrow. So we'll get you all the key events to align yourself with for Friday. But first up, let's head across to Vivek. Vivek, plenty of red once again today.
Good afternoon. That's right. Once again, the breadth of the market was quite weak, not holding on to any of the gains. But quite a few large movers in the session today. Let's start off with the top gainers. First, it has to be Bajaj Auto, a double upgrade coming in as far as CLSA is concerned on the rating of the stock. And despite the weak market, the stock held out quite strong in today's trading session. The other set of stocks that did quite well today was the rebound that you saw from the entire FMCG basket. So most of the FMCG stocks today actually managed to end the day with significant gains. So names like Marico, Colgate, all of these stocks almost 3-4% higher in the session. The other set of stocks, and one that we'll discuss in depth later on, is the chemical pack. So names like SRF, Navin Fluorine, ref gas prices in the US have gone up significantly. Remember, names like SRF has significant export to the US market, and they had a very good trading session. The other stock that did quite well was Zydus Life. Upgrade coming in from Nomura for this particular stock. They see significant opportunity from the latest launch of the company, and on the back of that, this particular stock did quite well too. And towards the end of the day, CGD companies, so both IGL as well as MGL, saw a bit of a bounce. This was on the back of the fact that they saw an increase as far as domestic gas allocation is concerned. But quite a long list of losers as well. The entire realty pack today saw quite a bit of selling pressure. Names like DLF, Oberoi Realty, all of them were down in today's trading session. Along with that, Oil India, one of the top laggards as far as the NSE 500 was concerned, so significant volumes as well in this particular name. And Kalyan Jewellers, once again after yesterday's respite or yesterday's recovery from the day's low, today once again one of the top laggards as far as the F&O space was concerned, down over 6% in the session today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's get in our experts. Ambareesh Baliga and Ruchit Jain join in on the show. Hi, gentlemen. Thanks a lot for joining in. Ruchit, you go first. Another down day. The hope is the recent low gets protected. That's around 23,450 or lower still, 23,200. Are you in that camp, or do you think we're just buying time? That level's there for the taking. It's going to get broken on the downside.
Yeah, very good afternoon, Nigel. Very good afternoon to everyone. Well, definitely markets have approached those supports again, but as of now, if you look at the overall market breadth, there are no signs of any kind of pullback move or reversal yet. I think only if you look at last 3 trading sessions, the market have been trading within this range of 23,450 to 23,800. So I think we need to see whether the index manages to make a firm support around these levels and surpass the 23,800 mark. Only then we would participate on the long side. Otherwise, it's better to be cautious since there is no support from the broader markets. Also, if you look at the FI's long-short ratio data since last 3 or 4 trading sessions, it's quite stagnant around that 18-19% mark. The positions are short heavy with around 80% positions on the short side, but there are no signs of short covering yet. So I think we would wait for the data to change, either some short covering data by the FIs where this short position reduces, or market or Nifty surpassing above the 23,750, 23,800. Then only one should look for long opportunities for short-term trading. Otherwise, till that time, I think we are in the camp where better to stay cautious.
Fair enough. Yeah, as of now, those shorts are not covering, perhaps not finding any reason to cover immediately. But let's see how the situation plays out. Let's move to the sector of the day, and that really has to be the chemical space. In a market that was downbeat, stocks like SRF, Navin Fluorine, they managed double-digit gains today, and that was thanks to expectations that, not just expectations, actually reality as well, that some of the refrigerant gases, their prices are going up. Let's in fact go across to our colleague Yatin for more details on this.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Aquarius note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. 2 varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Aquarius note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike, since the entire capacity is contracted, would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
Probably so. Yatin, thanks a lot for that. Ambareesh, your view on both these two stocks? Big move today, warranted? If there is good news, has it played out?
No, it is clearly warranted because of the supply disruptions, the way the prices have gone up. Clearly, it's a short-term opportunity. So, like I was saying earlier, possibly SRF can move up some more from here, but don't really expect it to continue moving up to levels of about 3,000, 3,200. I think that's difficult. I think the upside would be capped closer to about 2,800, 2,850.
All right, got that. Gentlemen, stay on. Let's move to the other stock as well, which is Manappuram that we're talking about now. Manappuram started the day with good news, with the relief coming in for Asirvad Microfinance from RBI, but then the gains fizzled out. Let's go across to Abhishek to understand what the street view is now, what different brokerages are saying. Abhishek, over to you.
Well, RBI has lifted the restrictions that they had placed on business being conducted by, Religare as well as DMI Finance. So all the four NBFCs wherein the RBI had placed restriction with respect to business in October 24 has been now lifted in less than 3 months. So we have Jeffrey's notes on Manappuram. They have an hold rating and target price they have increased to 190 per share. They say that RBI is lifting ban on disbursals of Manappuram's MFI subsidiary, that is Asirvad, is a key positive. It forms about 27% of AUM and about rupees 20 with respect to the SOTP or some of the parts target price that they have on Manappuram. This is a key positive trigger, they say. However, disbursals in MFI segment should stay muted in the near term given the stress that we are seeing in the MFI sector. So, for Manappuram, they say the valuations are attractive. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's get in Ambareesh to talk about this thing. Ambareesh, Manappuram, it was good news, but the stock came off the day's high. So if you could quickly give us your view, and then we'll go across to Ruchit to get his view on the stock.
That's true. See, I mean, lifting the ban was positive, so because of which we saw a decent start for Manappuram. But then, the lifting of ban was for the microfinance part of the the subsidiary, and the sort of a mood which is there on the market as far as microfinance companies is negative. So finally, I think that's what has played out.
Okay.
Ruchit, what about you? If you could tell us what's your take, because the stock saw a sharp correction and went in the ban, and from there it bounced considerably. On the charts, how's it looking?
So Nigel, if you look at a bit of historical data, when RBI had put that restriction in the month of October, the stock was trading somewhere around 175, post which we witnessed that gap down opening. But before this news came out yesterday, the stock had already recovered from the lows and surpassed the 174, 175 level. So I think somehow it has been discounted already. And whenever we see such gap up openings after news, the important thing is follow up move. If there is no follow up move, then I think the entire rally could get fizzled out. So there was no follow up move today. 195 continues to be resistance until we see a breakout above that. I think the news has been factored in the stock, and likely it's to trade within this range of 195 to 165 in the short term.
Okay, that's Manappuram. Ruchit, also didn't check SRF and Navin Fluorine with you. These stocks today had a very solid bounce after a long time. What are the charts indicating? Could this last?
I think yes, SRF specifically looks quite interesting because it has been into a long consolidation phase of 3 years. If you look at January 2022, the stock was trading around this 24,2,500 range. If we are in January 2025, the stock is still in that range only. So it has been a 3 years of consolidation phase for the stock, irrespective of what the markets have done in this time. So I think if we see a follow-up move or a breakout about 2,700, which has been the resistance, the long-term charts would get much positive. So I think within the entire space, it has been a long consolidation phase. So about 2,700, I think the uptrend would get resumed, and then the stock has potential to do even 3,200, 3,300 kind of range.
Okay, all right. Ruchit, final question before we let you go. The bulls will be turning to some of these heavyweights to bail them out. If you had to pick up one stock that could bat for the bulls, what would it be? Reliance Industries, HDFC Bank, ITC?
So if we look at the risk-reward ratio, then I think Reliance will have to take the job in case if we witness a pullback move or any kind of bounce back from these support levels. The oil and gas entire space have already seen a good corrective phase of late, and Reliance Industries is now trading around its weekly 200 average. And historically, whenever the stock has come towards this 200 weeks exponential moving average since the COVID bottom, we have seen the stock gaining buying interest again. So the risk-reward ratio seems favorable with Reliance over here. So I think this would be one stock to watch out for in case of reversals.
Okay, all right. Ruchit and Ambareesh, thank you very much for joining in. Good to have your views and opinion on the show today. Well, we need to take a quick break. On that note, we'll come back with some of the top corporate voices in the commentary that we picked up today, as well as the events to watch tomorrow. Well, the third quarter earnings season kicks off today with TCS declaring numbers, and it's expected to be a fairly muted quarter for the company. Rima is joining in with the key expectations.
Well, expect a muted quarter from TCS on account of three reasons. One, the seasonality, the lower working days and furloughs. Secondly, the incremental contribution from BSNL in Q3 is likely to be lower than Q2. And the third reason is cross-currency headwinds on account of the dollar strength. So dollar revenue growth is likely to be down 0.6% according to the CNBC TV18 poll on a quarter-on-quarter basis. Though on a constant currency basis, the revenue growth could be on the flatter side. There are some estimates which are mildly negative and some which are mildly positive. Our poll is at about 0.2%. EBIT margins are seen up by 40 basis points to 24.5%. This is after two consecutive quarters of a decline. And profits are seen up nearly 4%. Now, what will the street watch? One, the growth X of the X of the BSNL contribution. If you remember in Q2, international revenues declined by 0.4% for the weakest since COVID. Secondly, continued recovery in BFSI. Do the green shoots continue? Third, the outlook on US healthcare, because in Q2, we saw some clients cancelling discretionary projects, particularly in US healthcare. Has that persisted or have things recovered? And then the usual questions of discretionary spending. Is it back? Is it better than Q2? Has it extended itself to beyond BFSI? The client budgets, the outlook on margins, etc. Now, the stock has been a bit of an underperformer versus peers. In the last 12 months, TCS share price is up 8%, while in Infees up 25%. And as a result of this, Infees valuations have converged to that of TCS, and TCS share price is also about 12% off its peaks. Back to you.
Let's take you through the key corporate voices that we had during the course of the day. Ashiana Housing, well, they have maintained their FY25 pre-sales guidance of around 2,000 crore rupees, with an average selling price at around 6 to around 8,000 rupees per square foot. The management said that despite signs of plateauing real estate demand in Gurugram, the company's focus on affordable, lower ticket projects offers some protection. Also, we had another real estate company, that's Signature Global. They have maintained their FY25 guidance. They're targeting pre-sales of 10,000 crores and collections of around 6,000 crores for FY25. The management also said the company is seeing strong demand for the mid-sized apartments in the Gurugram/NCR region.
Well, let's move on. Borosil Renewables outlines its expansion plans in India, with the commissioning expected in 18 to 21 months. The company will be investing 675 crore rupees for the expansion, leading to a 50% increase in domestic revenues. The management adds that there is potential for a further 500-ton expansion in the future. All right, let's move to some market views now. Atul Suri, CEO at Marathon Trends PMS, is expecting the next few months of 2025 to be fairly challenging for the Indian market. This on the back of Donald Trump's return to the White House, the upcoming budget, and several other triggers, including concerns around earnings. Take a look.
The next 1 month is definitely going to be very volatile because you've got three very big things, I think, that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens. Because, remember, we are nearer to the lower band just by a 2% or thereabouts. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. A lot of news, but you just have to wait it out.
Well, Vikas Kumar Jain of CLSA believes that 2025 will be a year of consolidation for the Indian market, and that he doesn't anticipate more than single-digit returns for the year. Let's hear him out.
We need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns. Single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year. I think, see, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue.
All right, that was the view from CLSA. But before we wrap out, let's tell you all the key events that you need to watch out for tomorrow. Abhishek is standing by with the details.
Well, tomorrow we'll have the industrial production data for India. It is, last time it was around 3.5%. Manufacturing production data will be out. Last time it was around 4.1%. And also watch out for the Forex reserve data from RBI. Last time it was around $640.3 billion. With respect to USA, tomorrow you will get the non-farm payroll. It is estimated to come at 1,54,000. Unemployment rate will come out. It is estimated to be at 4.2% for USA. Now, DFS is holding a series of consultative meetings from 7th of Jan to 16th of Jan, so that will also continue tomorrow. We have a stock split tomorrow. Shriram Finance will get split from a face value of ₹10 to ₹2. There is a record date, that is 10th of Jan 2025. We also have the result season running in. So tomorrow you have the results from Brightcom Group, CESE, Equinox, GNA Access as well as Hathway. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, on that note, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.